Hello, it's Adil bringing you a review of the European and UK markets. Basically, it's always an intermarket analysis perspective. Now, let's have a look at what's happened today then. So, overall, FTSE up plus 24 and DAX is up by 37. It's been very volatile today. Okay. Now, what happened in the morning? So, we always look to see what happens overnight because remember, it's a relay race. You have three regions, okay, such as the US, Asia, and obviously Europe. So the risk on button, which I obviously teach my students on the mentoring program, the risk on button is always passed from one region to another, and consider it a relay race. So if it's a risk on button or it's a risk off button, so the Hang Seng was positive, so risk on button passed there. The Shanghai was negative, so risk off button was passed there. The Nikkei was positive, so risk on button was passed there. So overall, sentiment was obviously biased towards the upside. Okay, and that's basically where we stood. Okay, so let's see exactly what happened with regards to the FTSE itself. Okie dokie, so if we bring up a 60-minute chart of the FTSE 100, obviously we moved higher. So overall, a bullish day. So my bias was long from yesterday, given Mr. Carney Dovish stance, and given the fact that obviously we had the US markets closing at new highs again. Same thing with regards to Dow, obviously moving higher today. Whether or not we close at the highs will be debatable, but for now, we can certainly presume that the markets were bullish in the morning, and whether or not they finish, I'll be discussing that as well. Okay. Right, so with regards to the fundamentals overall, if you look at our economic calendar, as you can see from my voice, I am very tired today. Very, very busy day today in terms of trading and a few of the chores. The rental property, I had to get some work done on that, so very busy with regards to that as well. Okay, so Chinese data overnight, we had slightly weaker than expected. Chinese retail sales, industrial production, not exactly stellar. Okay. But what this market's currently focused on right now, it's all about the USD JPY. And if that's higher, then the stock market will be higher. Everything else is irrelevant. Okay, so what's Euro JPY, USD JPY? If they're higher, regardless of what the economic data is, unless there's geopolitical concerns, which obviously came to the forefront today, of which I'll be discussing very shortly. So overnight, Chinese data obviously slightly weaker. Hence the reason that explains why the Shanghai was weaker. Okay, so slightly negative tilt there, a negative bias there. And German data came out, CPI data came out in line, therefore reduces the argument of QE. So Mr. Weidmann and the Germans will certainly be happy with regards to that. Okay, so that's slightly negative bias on the German DAX. Okay, given the fact that if inflation came out worse than expected, then again it strengthens the argument, and the periphery will benefit, therefore the whole of Europe will be higher, so because the euro will go lower. Okay, harmonized CPI, ignore that. Europe is on inflation. Okay, so Euroflation came out slightly better than expected, so again weakens the argument for QE, so therefore it puts a bearish bias on the market overall. Obviously no QE, stock market is going down. After that, there wasn't really anything that's of importance, to be honest with you, thereafter, other than inflation data. Let's have a look. Unemployment rate in Europe, okay, slightly better than expected. Until the jobless claims. So okay, let's just carry on. Let's just talk up to the jobless claims. Okay, so overall, like I said, the bias was bullish because Mr. Carney was dovish the day before. Vodafone earnings and land securities were certainly propelling the markets higher, etc., etc., etc. Given the fact that USD JPY, Euro JPY are moving higher, everything else is irrelevant, and that's exactly the case because the Nikkei was higher overnight. So I had that bias long. Okay, I did expect oil prices to actually bounce, given the fact that obviously QE generally helps all risk assets in general, and that's not been the case. There seems to be some. I mean, the fundamentals with regards to oil right now are very distorted. Each time they try and prop it up, the Saudis come out, or one of the OPEC members comes out and obviously tries to talk it down again in terms of the falling price of oil. Whether or not that's targeted and it's war by proxy versus Russia, that's a different story altogether. You call me a conspiracy theorists, but that's basically what I expect. What I anticipate. Not only did I anticipate, but I expected it to happen, because they've obviously tried sanctions on Russia and that's not working. So the next step is to punish them via the commodities. And what's one of the biggest commodities, or one of the major commodities that brings in revenue, or the most amounts of revenue, is oil. So if you can actually reduce the price of oil, because as we all know everything's rigged. Just yesterday the stock markets were down because there was a £1.1 billion fine with regards to forex rigging. So do you think not just because they got caught in forex doesn't mean that they can't get caught in the commodities market as well? So it's a rigged game. Our job is just to basically read between the lines and surf the waves. That's all we do. Okay, it's irrelevant which way the market goes. That's what a day trader does. He just looks at sentiment, looks at the bias, news flow, the chart pattern, and obviously trades accordingly. And that's why today's been a stellar day today. I mean, total of 252 points for the week so far, or thus far, and it's only a Thursday, so hopefully should nail another 150 tomorrow, make it 400. So we'll see exactly how the week ends, but the week is young, and the market obviously can go in the opposite direction. So that's why I had the bias long, and obviously the FTSE did move higher. I closed the FTSE for plus 20 odd when he got to 35 region, and that's basically where it has been ever since. Now, one thing that I did notice when I was going long on European markets was that they were lagging, and they have been lagging. So with regards to the FTSE, as you can see here, even though this is a testament to the strength of the FTSE, given the fact that the FTSE is a commodity index and oil price has been falling, the inverted head and shoulders formation has certainly been playing out regardless, which is pretty impressive. Just imagine if oil price were to reverse now, say $5 to $10, or even $3 to $4, this would really propel the FTSE higher. So that's something certainly worth considering and certainly bearing in mind. Okay, so inverted head and shoulders formation on the FTSE 100. There was no real news flow out of the FTSE today, other than the fact that obviously, like I explained, we had Mr. Carney being dovish the night before or the day before. Inflation obviously forecast downgraded, interest rates pushed back, and that's all the stock market cares about. Any dovish monetary policy will always be bullish for equities. Now, if you look at the FTSE 100 today, the top three performers were Lloyds Bank, Vodafone, as we all know, because it's underpinned with good results, and Barclays. Impressive. Okay, interesting. Okay, so very interesting. So top volumes today, so that's interesting. Very interesting. Okay, so that's basically the outcome with regards to FTSE inverted head and shoulders. Next stop seems to be the 200 MA, and from my perspective, what will really propel this FTSE and really get it going is, I've been swinging long, by the way, from 600 with subscribers on the fundamental analysis service. That is for free. If you want to be added on that, just send me an email, I'll add you on. It's via WhatsApp. Okay, so that's basically where we are with regards to the FTSE. Now, the FTSE 250 inverted head and shoulders formation. We are approaching the 200 MA and the purple diagonal trend line, so that's going to be very interesting, and keep an observation out for that. FTSE 350 again, inverted head and shoulders. Keep an eye out for that. Okay, so the FTSE AIM all share certainly seems to be lagging slightly. It's not exactly moving higher with the rest of its peers, so keep an eye out for that. Now, the volatility index, this is interesting. The volatility index certainly seems to be potentially making a base here, and certainly an argument for a reversal on basically the volatility index. So if the volatility index moves higher, then obviously that means the FTSE moves lower. So this is something that I'm watching very carefully, and if I was a bull, I would, slight concern would be a concern to me. So, and this is on a day trade basis, obviously, so slightly concern to me at this level, where the FTSE being around the 6640 level. So we'll see exactly what transpires and how this basically plays out. Okay, some food for thought with regards to that. So okay, now the European markets, that's basically the bugbear. That's a real concern right now, because obviously one of the trades that I took today was short on the DAX. Now, I took short on the DAX on the 9300 level, managed to get 30 points out of it. Okay, and one of the reasons why I took that short was because the situation in Russia Ukraine certainly seems to be escalating, with NATO accusing Russia of XYZ, and obviously the possibility of this so-called peace treaty obviously being cancelled as well. And we've also had rumours and talk from with regards to Palestine, Israel. The situation certainly slightly heating up there with regards to a potential mosque being burnt down, etc., etc. And adding the fact that we've got the situation in ISIS, I mean, there's a lot of talk about Mr. Baghdadi issuing some sort of horrendous and well, I call him an arsehole personally, but basically he's threatening the West. So any type of threat like that should technically be bullish for gold, bullish for oil, and as oil, I mean, as you know from my previous video, I'm bullish on oil anyway, and we are doing well on gold, sorry, and we are doing well on gold at the moment. So that's going to be very, very interesting and see exactly how the market plays out from that perspective. So that's certainly something to keep an eye out for, okay, with regards to going forward. So now the European market, like I said, is weak. Now, one of the reasons why it's weak is because, number one, the inflation data that came out this morning wasn't supportive of QE. Okay, number one. Number two, the actual talk with regards to the anti-QE talk, or the anti-QE members certainly seem to be talking as of late, and are attempting to obviously downplay QE. That's number two. And number three, the main concern, like I said, was Russia and Ukraine. So whenever there's any trouble brewing there, that certainly doesn't bode well for the equity market, and that's why they generally tend to move in the opposite direction. Now, having said that, let's have a look at the technical picture. So we basically have closed that gap below. Okay, so we've certainly gone and closed that gap below, which is interesting. There is another gap that's open below that, and that gap is at 9120. Now, that's a worrying sign. Okay, it's a worrying sign. This pattern here is very bearish. Now, with the Nasdaq making a new high and yet the DAX failing to play catch up, that's a worrying sign. Okay, a very, very worrying sign. So that either means the Nasdaq will play catch up with the DAX on the downside, or the DAX plays the catch up with the Nasdaq on the upside. So that's something that certainly is worth considering and giving some careful thought process to. Although, having said that, we have held this diagonal trend line. So, and obviously the market did put in a doji today, so more than likely it does want to test the 200, just like the FTSE and the FTSE 250, FTSE 250. But can the market do that with these geopolitical fears hanging in the background? That's going to be very, very interesting. The Russell obviously has closed a gap and is into resistance, so therefore European markets are into cap or into resistance as well, or potential resistance. Now you have the this is the chart of the CAC, as you can see here, sold off, then reversed quite powerfully on the 10-minute chart, and on the 60-minute chart we seem to be making a H&S formation. So this is a concern for me, so just keep an eye out for this. This is a slight concern for me, so we'll see. And then given the fact that we have broken out the of the bullish basically a symmetrical wedge pattern, and a rising trend line, we are still below that. It is a cause for concern. Okay, so this is something that we need to observe, and given the fact that we have an unfilled gap below at this level here, the 4130, that's going to be very, very important and very, very interesting too. Okay, let's have a look at the Euro stocks. Okay, Euro stock certainly has closed the two gaps below, and certainly does seem to be pointing an inverted head and shoulders. So this is the opposite of the other two, and this certainly has got a potential bullish setup on the 10-minute chart. Now let's have a look at the 60 minutes. 60 minutes, we did touch the 200 MA and we closed the gap, so therefore the market bounced. That was expected. With regards to the move going forward, again it's debatable, and we'll have to see exactly which way the market goes from this perspective. Okay, that's about something that we're going to be focusing on at present. Okay, so the 200 MA certainly has held. Now, given the fact that this setup is present right now, Eurostock certainly seems to be the bullish out of all three. This would then presume, or this would then come to a conclusion, that the euro has to fall. In order for these European markets to propel higher, euro has to fall. So this is more or less calling for a potential euro fall and obviously European market rally. Now I have attempted to short the euro, but to no avail, and I had to bail out and exit the trade. Okay, so that's something that I'm going to be focusing on as well. A lot of variables that really need to be focused on. Now the US markets right now, as you can see on the 60-minute chart or 10-minute chart here, you have a H&S formation. So that doesn't bode well, temporarily speaking anyway, with regards to European markets going into tomorrow. So again, I'll have to reassess and see what the situation is as the time goes. But at present, it's certainly not looking promising for the bullish side of the equation. Okay, folks. So that's basically where we are now. If oil price does actually reverse, then yes, the FTSE does have a chance to hit the 200 MA. If the oil price continues to slide, then kiss that goodbye and the market reverses quite powerfully. So that's all I'm going to give you in with regards to an insight on the markets. Like I said, remember, Russian and Ukraine situation plus ISIS situation now is going to create a geopolitical concern, or is a geopolitical concern, and geopolitics are not embraced by the market, so don't be surprised if you see a sharp sell-off later on. Over and out. Risk on, risk off. Wax on, wax off. Goodbye now.